The A, I just flagged something huge for XRP that hasn't appeared in weeks. Let's break it down. Here's where we are right now. XRP is sitting at $1.0974, up a modest 0.90% in the last 24 hours. Now, you know what I've noticed? While that sounds pretty calm on the surface, there's actually a lot happening underneath. We're consolidating right near the Bollinger Band middle line, but here's the interesting part. We're still sitting 25% below that crucial 200-day moving average at $1.4645. That's actually not as scary as it sounds, though, because sometimes these deep pullbacks create the best launching pads. Here's why this technical setup matters so much right now. The RSI is sitting at 43, which is perfectly neutral territory. Not oversold, not overbought, just waiting. But here's the thing that caught my attention. The MACD is still negative, but that histogram just flipped positive to 0.0110. In plain English, the momentum is quietly shifting upward, even though the main trend hasn't caught up yet. It's like watching a car that's still rolling backward, but the engine just started pulling forward. That 25% gap below the 200-day average, well, that's a lot of room to run once this thing breaks out. Now, the big macro picture is telling us something important. XRP has this strong negative correlation with the dollar index at -73%. So when the dollar gets weak, XRP tends to fly. The challenge right now is that correlation with traditional markets. We're seeing -80% with the S&P 500. That means if stocks rally hard, money might flow out of crypto temporarily. But here's what I've learned over time. These correlations can flip quickly when sentiment changes. On the regulatory front, well, it's actually pretty quiet news-wise, which honestly isn't a bad thing. But here's what is happening. Those XRP ETFs just pulled in $17.4 million in net inflows. That's institutional money quietly accumulating while everyone else is distracted. When the big players are buying and there's no negative regulatory news, that's usually a good sign for what's coming next. The mood right now is pretty grim, not gonna lie. The Fear and Greed Index is sitting at 22, which screams extreme fear. XRP search interest is down at 35, so retail investors aren't even paying attention. But you know what I've noticed over the years? These extreme fear moments, especially when they hit 22 or lower, they often mark the best buying opportunities. It's like everyone's looking the other way right before something big happens. The big players are doing something really interesting right now. We saw 8 600 transactions yesterday, but get this, 175 of those were whale transactions. That's almost 14% of all activity coming from the big wallets. And their volume? 1.1 trillion XRP, which basically matches the entire network volume. When whales are this active during a fear phase, they're usually accumulating for a reason. They know something the retail crowd doesn't. In plain English, here's where we are in the bigger picture. The Elliott Wave suggests we're in that final C-wave correction phase. Think of it like the last chapter of a boring book before the exciting sequel starts. The Wyckoff analysis shows we're in Stage B accumulation with 36% confidence. That's smart money quietly building positions while prices are still low. It's like watching someone fill up their shopping cart during a clearance sale. So what does the A, I think? This is where it gets really interesting. Short term, it's targeting $1.4857. That's a 35% jump, but only gives it 50% odds in the next day. Fair enough, but here's where I get excited. The 7-day prediction shows $1.5607. That's 42% upside with 98.5% probability. Wait, 98.5%? That's the AI basically saying, I'm almost certain this is going up next week. And long term? $1.7773, which is 62% gains with 87% confidence. Those are some pretty bold predictions, but here's what could go wrong, because we always need to be honest about risks. If the dollar keeps getting stronger, that -73% correlation could drag XRP down further, And this extreme fear at 22, sometimes it can get even more extreme before it bounces. The biggest risk I see is if we break below that $1.08 support level, that could trigger some panic selling before the smart money steps in. Here's my take. This is a phased accumulation opportunity. I'm looking at primary entries between $1.05 to $1.08. If it drops more, there's a secondary entry zone from 98 cents to $1.02. Stop loss? I'd set it at 95 cents because if we break that, something's really wrong with this analysis. First target is $1.45 to $1.50. And if this thing really runs like the AI thinks, we're looking at $1.75 to $1.80. The risk-reward here looks pretty attractive when you combine the whale accumulation, ETF inflows, extreme fear reading, and that confident AI prediction. That's it for today's analysis. If this breakdown helped you see the bigger picture, hit that subscribe button and give it a like. I'll keep watching these signals and see you in the next one.